Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 30th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. A big week coming for the dollar here. We have the non-farm payroll. We also have the FOMC. However, the indicators from VantagePoint are warning us to be very cautious here. We can see that our breakout level from back up around this 91.90 area, we've retraced back to it, but the medium term is crossing the long-term predicted difference to the downside, meaning that the medium-term trend is weakening against the longer-term trend. However, the neural index is still pointing higher. The predicted RSI also starting to lose momentum in heavily overbought territory. So the one thing I will point out here, guys, is that the dollar has given up 10-12% of its value over the last year and a half. And we've had some really fantastic data, some tax cuts out of the US, just a lot of really good things economically happening in the US, and it hasn't helped the currency one bit. It's actually hurt the currency. Surprisingly, very frustrating for fundamental traders. But here with VantagePoint, we get a very good idea of where the dollar is going on a month-over-month basis. Right now, we are still bullish, but it's losing momentum. Now, if the dollar is to lose momentum, that would put upward pressure on the equities next week, but the equities, specifically the S&P 500, is really been struggling in 2018. It has not been having a very good year at all, in my respectful opinion. We're basically more or less net, slightly positive on the year, but not enough to even really. I think we opened the year around 2667. We've closed Friday at 2671. So kind of a dead cat bounce off of this 20, 25, 40 area. But again, it really is moving sideways, and it's not going. And it's the one thing I will point out here, guys. We're starting the intermarket correlation to oil is not really there. Oil is breaking out on its own based around those seasonal patterns that I've talked about. Oil is likely to continue higher provided we hold above 66.77, a very, very critical area. Now, this should help gold, but gold also struggling under that dollar strength. But I'll point out here, guys, also that it's perfectly normal for flows to go into the dollar at the beginning of the month, but it's also normal for the flows to go out of the dollar in the middle of the month. So the dollar is probably going to see a little bit more strength. But when we look a little bit closer at the indicators from VantagePoint here, bringing in this into our 3-month time frame, we can see that gold, even though it's been moving lower and people are getting bearish on it, VantagePoint is actually getting bullish on gold here. We can see the medium term crossing the long-term predicted difference, neural index turning higher, RSI recovering. So not exactly a bullish setup for the dollar. Now, the million-dollar question is, how is this going to affect Euro-US next week? Well, guys, basically, in short, that the data out of the Eurozone has not been great, but it hasn't really hurt the currency. The ECB, Mario Draghi, was not overly dovish on this past Thursday. The euro sold off a little bit, but we can already see the trend starting to shift back to the upside. We're in heavily oversold territory at 17.4 in the predicted RSI. So I would be cautiously bearish on Euro-US, but as long as we're holding above the 120 mark, the euro is still, there's still buying interest in this particular currency. Now, can't really say the same thing for the Swiss franc. Now, the Swiss franc, again, has really pushed higher, but we're coming into a very heavy resistance zone that goes all the way up just above parity. The further we move away from the VantagePoint critical 18-day predicted moving average at 97.06, the more likely it is we're going to retrace to it. So be very cautious with this one next week. We're in overbought territory. If the dollar starts to take a hit across the board, this pair will move lower aggressively, probably quicker than most of the other pairs, particularly if the equities move lower with it. Now, as we come into the British pound for next week, I've been fairly bullish on the British pound for most of the year, and I still am for the most part, guys. We're coming into the bottom part of the range, but again, I think the market is grossly overreacted to the UK GDP rate. Now, the one thing is, the UK has never really been talking about being overly aggressive on their interest rates. The US has, but money still is going into the British pound. Some Brexit fears, but not enough to be overly concerned with here, guys. Brexit's a good thing, not a bad thing for the UK. So ultimately, I think that's going to come about, but we're sitting at 6.6 on the predicted RSI here, guys. So not exactly a real strong bearish move to the downside. We're starting to run out of steam. Our medium term is starting to turn back up. I anticipate the Neural Index will support a long trade probably by midweek, but a lot of event risk with the non-farm payroll number and, of course, the all-important FOMC. Now, with dollar yen starting to get a little toppy again here, guys. Medium-term trend weakening, Neural Index pointing down from heavily overbought territory. This pair is a tricky one, but I would anticipate it's very likely a retracement back towards the 107.89 area. But if the market really starts to get bullish on the US dollar, this pair could continue to break out to the upside, so be careful. But right now, at least in the medium-term trend, the Neural Index and the medium-term predicted difference are warning that there could be some downward pressure here. I think the same thing basically applies to US-Canada. When we look at US-Canada, congested resistance around 129.20, yet again right here, a medium term crossing the long term, predicted difference in the opposite direction. The Neural Index is supportive. You can see I've put a trend line right inside the predicted RSI. We're failing exactly on that trend line, the RSI pointing lower. So not a lot of upside momentum. It's perfectly normal for this pair to move higher at this time of year, guys. With oil prices moving higher, the CAD is stronger, meaning US CAD moving lower. So for now, I would say that it's likely imminent that we're going to retest the key VantagePoint level at 2770. Watch to see if this level holds, but at least in the medium term, we're not showing a lot of strength on this pair to the upside. Now, our additional two main commodity currencies, Aussie and New Zealand, are showing a very similar signal here, guys. When we look at the medium term crossing the long-term predicted difference to the upside, the predicted RSI bouncing higher, and then we've got a pretty significant amount of support sitting down around the 75 level. So as long as we're holding above 75, we should probably expect a retest of the 7666 area, excuse me, and that of course is that key VantagePoint long-term crossover pivot area. So a pivot area is an area that we go towards, then we see if we're going to either hold at that level or break above. If gold recovers, the US dollar sells off across the board, we should easily be able to hit the 76 mark, 7670, 7680, or even higher this coming week. And again, in my respectful opinion, the same applies to New Zealand here. Now, New Zealand is a little trickier here. You can see we've been in a fairly strong move up. If we look at this over even a 9-month period, we've had a big move up and then kind of into a sideways channel. But we've also got what I would point out here, a triple top that formed over a 9-month period of time. And then on the bottom side of here, we broke this 7160. Now, again, if the commodities continue to recover, that should help this pair. If we look at the medium term crossing the long term predicted difference, the Neural Index turning higher, it's again warning that not only the Aussie could recover this coming week, but also New Zealand. So a very choppy event risk week coming, but there should still be some decent trading there. So with that said, this is the Forex Weekly Outlook for the week of April the 30th, 2018.